I'm Robert Harrington. I run the crypto and digital asset franchise at Cantor. I've been here for 7 years, and I've been 100% focused on crypto for the last 4.5 years. Worked directly with Brandon Lutnick, a 28-year-old, very young and forward-looking chairman of Cantor Fitzgerald. And we've been involved in a few, I think, interesting situations recently in terms of 21 Capital, and then something we're very proud of, which we announced with Adam Back last week. And so I'm very excited to work with Brandon and the team. I think they've got some very big kind of ambitions for what they want to do in the space. So very pleased to lead the graveyard shift at the TIE conference. So congratulations to everyone for making it through. It's been a great 2 days. We will start by just having you go down the line, starting with Adam. Just introduce yourself and your fund and your role of the fund.
Yeah, so my name is Adam. I'm the GP of Collider. We invest in early stage, mostly equity, but also tokens, early stage, and mostly focus in Israel. We also do some, from time to time, some incubation.
Hey guys, my name is Akshat Baidia. I'm head of Arthur Hayes' family office called Maelstrom, and we mostly focus on venture deals. We also do some liquid, and we're starting to do some equity plays as well.
Hey everyone, I'm David Greider. I'm a partner at Finality Capital. Finality is a digital asset focused. We have a venture fund, and then I run the hedge fund.
Hey everyone, my name is Andy Kangpan. I'm a co-founder and GP at a firm called MetaLayer. MetaLayer Ventures is focused primarily on early stage VC investments in the crypto space, so pre-seed and seed focused. We spun out of a larger investment manager called 2 Sigma last year and have an emerging liquid practice as well.
Perfect. So for the final panel of today, the topic we were given was the edge of specialization, thematic versus generalist crypto funds. So we'll start at the far end and ask each of you to sort of unpack that. Like, is it a good discussion? Is it kind of BS? How do you think about it? And how is your fund positioned in that discussion of generalist versus thematic?
Yeah, so we have a very deep belief that crypto is a maturing industry, and as such, specialization is incredibly important. I think as opposed to a handful of years ago when you could cover the space, at least from a venture perspective, as a generalist and see all of the exciting deals in a given year. We think that's very difficult to do now, just given how large the industry is. And so from the start, when we launched our firm, we really honed in on what we felt was our superpower, which coming from 2 Sigma, we felt we had a very good understanding and network to invest into the intersection of financial services and crypto, and really supporting founders that are building the next generation of companies that are targeting businesses that are serving these institutions that are entering the space. And so we felt that's very core. We felt that was very core to our strategy and continues to be a big focus for us. And likewise, we structure our fund such that it's exclusively focused on venture. We do have an emerging liquid product, but it's completely separate in terms of the day-to-day focus on the venture side. So we don't commingle those strategies, and how we think about approaching the space is entirely as a private investor.
So I think, from our perspective, we probably would straddle both. So I think that our venture fund, very thematic focus, and I'll talk about the thesis there and how we think about the market. And then for the hedge fund, I think we'd probably land more on the generalist side. And, I'll go back to, I'll keep going with the hedge fund for now. So on the hedge fund side, we think it makes a lot of sense to be able to invest both, across the universe, but across the asset classes that are really emerging because of, really the convergence of, Web3 and traditional finance. And, you don't just have to be a crypto fund just on crypto. We think of ourselves on the hedge fund side like maybe like an energy fund that specializes in the industry, right? So that's maybe where we're thematic in the fact that we specialize in the industry. But we can go, if like an energy fund, you can invest in oil, you can invest in the commodity, we can invest in Bitcoin as a spot, we can invest in the futures, we can invest in the derivatives, the options, we can invest in the companies on top. They could be small E&Ps, they could be majors. We could invest across the cap stack, debt, equity, and some great macro investors. We aren't forced to, if there's not great opportunities in beta of tokens or crypto, to be forced there. We can do credit and debt and do other things to go more general broad within this industry focus we have. But on the venture side, the way we focus at is, obviously pre-seed, seed, Series A. You have to be very specialized, and we have a really strong core thesis that exists there. And that key thesis really is around, disrupting the Web 2 application stack with Web 3. And just, quickly what that is we believe that, the reason there wasn't a lot of great apps is there wasn't a lot of great middleware. And we thought that restaking enabled, the great middleware, and then, have a great middleware that's like, opacity, for example, which is like Plaid for Web 2 data that enables you to connect to the Web 2 data on chain. And that's enabling great apps. And then we think there's this consumer app phase, and we're very focused on the thesis of, that consumer app phase and everything that's enabled, because of that.
Yeah, makes sense. I think our experience kind of echoes that a little bit. We started off as a super lean team, so we were just, initially when we were founded, it was 2 people. It was Arthur and me, and then we had half a resource. At that point, we were super interdisciplinary, right? We were a very cross-functional team. We had to kind of do everything. But as we started to scale up, we started to create more like verticals. So we had the venture, we had the hedge fund, and now we've got these equity plays. And we're finding that even with that setup and that structure, it's still important to retain that cross-functional nature, because each of these deals that we look at in a span of a short period of time, they're going to have basically like a pre-token stack, then there's a token stack, and there's an equity stack, and now you get the DAT stack, right? And all this is happening in a really short amount of time. So it's kind of hard to just silo it off into the venture team looks at these kinds of deals, the hedge fund team looks at these kinds of deals. Everyone kind of has to look at everything. So we're still trying to figure out that balance alongside, I think, everyone else in this industry.
So for us, in terms of specialization, we're very geo-focused on Israel. There's actually a tweet that I read this morning that say there's 3 things that you don't want to fuck with, which is the IRS, the SEC, and the Israeli. But on the 3rd thing, you can actually invest and make money. So we invest in Israeli companies, mostly 70-80% in Israeli company, Israeli founders, could be in Israel, could be in diaspora. And the superpower, this is our superpower, and the superpower that we found out in those Israelis, that there's a lot of talent that is mainly concentrated in cryptography and cybersecurity, which is very centric to what crypto is about. So if you think about companies that are coming out of Israel, there's Fireblocks, there's Starkware, and there's a bunch of other. So that's one thing. So because we're very, very focused on the geo, on the other side, we don't have a team. We invest across the sector. We invest mostly in equity, but we'll do some liquid as well, and we'll try to be as versatile as possible.
Perfect. Now, when you think about, for those of the funds that are really leaning in hard on the thematic side, do you think that ultimately leads to more concentrated kind of risk and positions, or is that a misconception?
So for us, you could argue that being very geocentric is basically thematic, but we actually like the concentration. We basically think this is a superpower. We actually think that. So the overall thesis for Israel is that we believe that Israel right now is top 15 ecosystem, which is nice, but could potentially become top 5 ecosystem in the world after the US and other ecosystem. So we're long on the thesis, and obviously if we'll be wrong in 5 or 10 years, we have we don't exist. But if we're right, then we'll probably be able to return an abnormal amount of money, and also we can give some sort of exposure to a lot of LPs that want to diversify and don't have access to the Israeli market. So if I talk to LPs and I tell them, if you believe that Israel could potentially be a top 5 ecosystem, you need to have access to that market.
You say the question one more time? I forgot.
Yeah, in terms of on the thematic side, does that ultimately lead to more concentrated risks, and or is that a misconception?
Right. Well, I think every successful fund ultimately is concentrated on some parameter. For us, it's been a lot of like DeFi. So even if we see ourselves as highly diversified, we ultimately are concentrating around certain areas. and that comes with I think with look at we don't have LPs, but if we were a fund that took LPs would have to just kind of bucket each of these fund managers in their own like little risk reward parameters that are non-overlapping. And so we like to be concentrated, and I think if I were to raise a fund with LPs other than Arthur, I would say that, yeah, look, we're good at two things. We're just going to focus on these two things. And if you want more exposure beyond that, then find fund managers who don't overlap with my mandate.
I'll say a couple things. Generally, even for our hedge fund, which is more generalist, we tend to take concentrated bets, even on that side, because we like to just know things that we like to invest in things that we really know, understand, and can underwrite well. Kind of like put your eggs in one basket, but not all, just one egg. And I think on the venture side, I think there's inherently, as you mentioned, there is like if you're going to take a thesis-driven view, you're going to have to be right on the thesis, but you can still be broad in the way you execute that thesis. So, for example, like the venture fund the first fund one had a big thesis around shared security, right? And we expressed that through Eigenlayer ecosystem, Babylon, and some stuff on Solana as well. So you can be across ecosystem, but we just had this core view that the way that the application stack was going to be reinvented from a technology approach. So, we are concentrated in that respect, making that bet. So I think it's, there's mixes of concentration and, thesis-driven kind of diversity you can have within that.
Yeah, I'd echo a lot of what everyone just said. I think being thematically driven in venture means you're inherently going to be concentrated from a sector perspective. But I think in the modern day of venture capital, as an emerging manager, which is what we are, that is really the only way that you can build a business for yourself, because you're competing against large platforms that have more funds, a bigger team, have a better brand. So the only way you can really compete is to identify a space that you can go earlier and have deeper insight into. And so I think from an LP perspective, if I were allocating to managers, that's what I'd look for is the funds that are going to get you beta to the asset class from a venture perspective, and then the funds who may outperform because they have a particular viewpoint. But we approach it in a way that is diversified from a portfolio perspective. So we don't pile into one or two names. Like we're trying to build a portfolio of roughly 25, 30 companies within the category that we're focused on.
Perfect. So I'll start this one with Ashkat. So in terms of, you talked about in your last answer, you and Arthur are really focusing on two very clear things, and if investors are looking for alternatives, or more broadly, they can look elsewhere. So there's two things that you're very comfortable with your focus. How do you think about those two areas of focus through the lens of crypto winters and then the crypto summer that we're in now? How does kind of a good market, a tough market, and we've seen two extremes in the last couple of years, how does that kind of impact the way you think about those two core areas of focus for you?
Yeah, so as a family office structure, a single LP fund, we're not pressured to deploy when we don't feel it's right. So for us, we're able to, as a result, remain very counter-cyclical. But that being said, a lot of the times, this is still a momentum industry. So sometimes there are great innovations that happen in the middle of the crypto summers, and there's solid projects that might be overvalued relative to the comps if you were to look at cycle agnostic comps. But there are times where we do have to deploy capital in projects that are promising but overhyped and a little bit overvalued. So I think that we try to remain as disciplined as we can, but sometimes you do have to let things slip a little bit. I think also as a family office structure, we're able to figure out other ways to structure around that. So for example, because Arthur is an operator himself and he founded a company, ran it, he often comes on as a kind of like an advisor to projects to help us bring down our dollar cost average a bit as we're making further liquid buys or even in the initial venture deals. So we try to use tools other than just timing as far as like winters versus summers to bring down our cost basis.
Anyone else who has a kind of a strong view about how their current strategy is kind of tested or challenged by those two extremes of crypto winter and crypto summer?
Yeah, I have one I'll add. So, for the hedge fund, what we did, the start of this year was obviously very rocky for a lot of people. We think we managed it really well. So In December we went to like 50% cash, and in January went to about 75% cash. But we didn't want to sit in cash in February. So what we did was we went and bought some of the MicroStrategy preferred notes, the Stark notes, and we like that because it was trading at a 9% implied yield, and high yield rates for the index triple C is like 7.5, and we thought the market was falling apart, so we said okay, we think more rate cuts will get priced, so the base rate fell and we traded up on us. So we got paid on it, traded up on us. The whole crypto market was trading down, so we had diversification to the portfolio instead of just owning cash or just being in beta. And later in the market, we have this whole toolkit now that we can use, and we use it. We try to use it the best we can of just managing different, both obviously managing gross risk, net risk, but also managing risk spectrum of assets and the correlations now, which because the market's much more sophisticated with all the new companies coming to market thanks to folks like you all. So we went to the senior converts right down in April because we're like, okay, we think it's the bottom, but we said, we don't want to have full Bitcoin downside, but we think we can get credit like downside in the MicroStrategy 31 senior converts. We bought those, and we happened to be around the bottom, and we had a bunch of optionality to them because they were in the money. So as the market rebounded, we go to the equity, and then we get back into Bitcoin, and we get back into the altcoins, and that's kind of how we want to manage the different the whipsaws of the cycle. It's like we can be like a regular fund where you can go into credit if you think the economy's going into a recession, or you can go into equities or converts, so you can manage different instruments along the risk curve.
I will add from a VC perspective, I'm separating the answer to two. There's when you deploy money and when you actually exit your position. So we're a long-term investor. We structured as a closed-ended fund, meaning that we raise money. If there's a cycle, a bear market, we actually don't have any problem because there's no redemption. It's actually probably the best time to deploy money. We raised the last fund beginning of 2022, and there were still very high valuation because of 2021. And so one thing that we did decide, we started with a 3-year mandate to deploy all the capital, and then we decided to increase the diversification across vintages, and we added another year because, as opposed to Ashkat here, we do have to deploy the money, but we can decide, how long it's going to take to deploy the money, and we want to deploy it when there's actually, bear market, depressed prices, and companies come to us with lower expectation of valuation. Number two, because we know that we will go through bear market and sometime company will also have a tough luck, raising money. We also have about 25-30% cash that we stash away in order to basically support companies if there's a pay-to-play or if there's a company that needs an extension, then we give them. On the exit, we just wait 1 or 2 cycles. We don't know when to exit, but when we think that the company reached some sort of maturity, then we start exiting over time using a TWAP because we don't really know when we need to exit a position. But mostly when the token or if it's token, then we exit over time. If it's an equity, then obviously IPO or getting acquired.
Perfect. So one of the things at Cantor we've been doing for the last 4 years when we started providing research services, investor education, capital raising for the Bitcoin miners, and then kind of expanded to other parts of, I will say, kind of the high-level Bitcoin ecosystem, not getting deep into the weeds on what I know some of you guys are working on. Part of our big focus was, getting to generalist institutional public market investors and just helping provide research, education, and to be honest, they're in a very different spot than they were 2 years ago and certainly 4 years ago. But my daily interactions are still with many generalist funds, be they long, short, or long only, who quite frankly are still getting their arms around what do they think about Bitcoin and how they're going to have exposure to Bitcoin. So whilst that is, store of value, use cases, obviously treasuries become a big focus for the public markets. When you look at the venture side of your business, how much are you focused on kind of innovation within Bitcoin, like use cases, what Bitcoin will become in 5+ years in terms of utility? How much of a big focus of that for your funds is the Bitcoin piece right now of crypto? Adam.
So we, the way I look at this is, Bitcoin is a financial asset, and then the rest, Solana, Ethereum, and the other are probably more high tech, and so we're probably more focused on that side than this side. We did invest in some company who leverage, the Bitcoin ecosystem, but less. So I would guess if I was a hedge fund or I was a liquid manager, I would probably focus more on Bitcoin, but we're less focused on Bitcoin.
Yeah, I think for us, Bitcoin is store of value. We dabble a little bit in some experiments in the DeFi on Bitcoin category, but we're of the view that our time is better spent on the smart contract side of things when it comes to DeFi, and let Bitcoin just remain a store of value.
On the venture side for us, we say this a lot. Some people are focused on money crypto, we're focused on tech crypto. And generally that does just mean we're focused on really building this like the Web3 application stack. Like with Eigenlayer and the middleware layers that exist on Ethereum, but also, on the Bitcoin side, we have invested in things like Babylon, which lets you do, non-custodial trustless staking on Bitcoin, so like the Ethereum beacon chain, and then we've invested up that stack with like SatLayer, for example, where you can do restaking of Bitcoin to hopefully allow, different applications that exist across like layer 2s and etc. So that's like the bets we've made there in the Bitcoin side, but our thesis is more general than that across this kind of middleware and application stack.
Yeah, similar viewpoint. I think we have less of a focus on Bitcoin from a venture capital perspective. We think it's a financial asset and increasingly will be adopted within the institutional ecosystem. So as such, we may opportunistically invest in tooling and infrastructure that makes that easier to access for institutions and retail users, and potentially use that in other financial services, potentially as like collateral, for example, and mortgages or things like that. But we are we're fairly pessimistic about Bitcoin as a smart contract ecosystem, and have not seen any successful experiments there. So we are more focused on ecosystems outside of Bitcoin on the application side of things.
Which is interesting because I think so many generalist investors right now on the public markets are learning, again, the majors through primarily right now. And we've been involved in a number of high-profile Solana treasury deals, and quite frankly, the education process about, quite frankly, the basics of what is Solana, how do I understand this? For people like you live it day in, day out for many, many years. So most investors that we're speaking to on the public side are still looking at and learning about Ethereum, a little less so, but certainly Solana, some of the other majors, and anything out of the top four, predominantly today through the lens of treasury, right? Which obviously is one piece of it, but not the real underlying protocol. Leaving treasury aside and beyond Bitcoin, what are kind of the one or two high-level areas where you think you're seeing the most innovation in crypto today?
I mean, one area that we're super excited about, but it's a longer horizon, is Deepin, right? It's going to be larger than probably the size of DeFi today. Deepin in the future will be larger than that, and I think that's a category that eventually will bring crypto outside of like crypto, right? Like when .com businesses stopped becoming .com businesses at some point, they just became businesses. I think Deepin is going to be that for us and bring it into the mainstream. And there's a much longer life cycle for that. But yeah, I'd say if I were to place, like a 10, 20 year long bet, it would be in that category. Shorter term, DeFi.
Okay.
So on the venture side, we have this view that there's really been 2 eras, and we think there's going to be a 3rd era of just like, real adoption for Web3. We think the first era was, the currency era, whether that's stablecoins and Bitcoin. The second era being the finance era, which is like DeFi. And then we think the 3rd era that's going to exist is going to be what we think is going to be like consumer era or consumer finance era. And what we think that's going to be enabled by, as I mentioned, some of the middleware apps. One, for example, I mentioned was like opacity. So it's, you take any Web2 data, it's plaid for Web2 data. You take any Web2 data, you put it on chain. And it's going to enable all these new apps. So, I have an app on my phone called Earnify that I was able to connect my JP Morgan bank account to, connect my Gusto to, and then I could do that on chain, connected it on chain through this middleware app, and I could take out a payday loan. You can't do that with regular DeFi today because you can't trust the bridge between it. But you can trust that it came from JP Morgan server and Gusto server, and you can do all kinds of new novel apps. So we think it's going to open up a whole space of new apps for like just consumer apps in Web3. Other examples are like porting your DoorDash rating over or your Spotify listening history. And we think there's just going to be a ton of consumer apps that are going to emerge because of that. And that's the area we're most excited about on the venture side.
Yeah, our focus is really on usage outside of the crypto native population. And so the only sectors that we see real adoption today is trading and payments. So outside of that, everything is, from our perspective, very speculative. And so that's been where our focus mostly is on trading infrastructure that services the needs of larger institutional players. And then stablecoin enabled payments have been a really big category, I think, for most venture investors in the crypto space more recently. And so that's where our focus has been. And then I think RWAs are promising, but still quite nascent in terms of sustained usage. So we're monitoring that category quite closely, but I have been hesitant to make really high conviction bets there quite yet.
I'll add on top of that trading and payments is definitely something we see and we like, and we see a lot of unicorn, for example, in Israel, who are basically starting to implement, in the back end, the crypto infrastructure, and it's amazing to them. They connect with Bridge and Stripe, and then they have the ability to move money much faster, and it really reduces their operational overhead by 80%. On the trading side, I don't know if you would say prediction, but I love prediction. So we've invested in consumer apps that do prediction. I think it's a huge, it's actually a good way to bring a lot of consumer that are not crypto oriented.
Perfect. So in the last 2 minutes before the bar properly opens, I'll be joining Mr. Bicella for a nice glass of Sauvignon Blanc. 3 quick short answer rapid fire questions. So which one thematic bet in the public or private markets do you think is most hyped?
Treasury companies.
Say AI agents, like agentic AI stuff in crypto.
I'm going to also say treasury companies.
Treasury companies.
Pretty clear view there, so we'll see. Which vertical within crypto do generalists consistently misunderstand the most?
Anything that is safety related, so cybersecurity, insurance, all of that. I mean, mostly because most users right now in crypto that are doing DeFi, for example, DGen, they don't really do that, but we do believe in the next 10 years there's going to be more usage of that on that front.
I'd say the incremental value from additional newer, faster L1s. I think we're kind of tapped out for now where we are.
I'm going to pivot the answer a little bit, and I'm going to say I think TradFi generalists, because they are the ultimate generalists. These guys who have 1% of their book in crypto actually misunderstand the industry as a whole the most. And like I've seen it with like Coinbase, like with the when the ETFs launched, they thought like they had sells on the stock because they thought like trading volume would go to the exchanges, but no, it's like the price went up, trading volume went up, they got custody fees. I think that's what generalists actually misunderstand most is outside of crypto, the broader generalists who aren't looking at our industry every day like we are.
And sorry, just to clarify, you mean like generalist venture investors, what they misunderstand about the space? Is that
Either.
Right? Yeah. Got it. Yeah, well, it's interesting. I think generalist investors are largely still not investing in crypto. The only generalist investors we see around are fintech investors, arguably not even generalists because they focus on financial technology. But they're pretty active now in the payments space as it relates to crypto. But I'd say generalist investors, I think, still largely misunderstand what's happening in crypto at the moment. I think they're just being introduced to stablecoins via the Circle IPO. So I think the whole space is pretty misunderstood from a generalist POV.
But I would agree. Final question of the day. What is for you personally, what is the number one thing that you are trying to learn the most about incrementally in crypto in the next 6 months? You're not ready to invest yet. It's not a fully baked idea, but you're just trying to do the most deep personal understanding and learning about a new area. What would that be right now?
I mentioned deep in. I think it's a huge, growing, interesting category, massive TAM, but there's so many aspects to the token value accrual mechanism that I want to be able to understand, perfect, and help portfolio companies with.
I think for us, it's the on the hedge fund side, it's the crypto equities of the actual companies that are going to go public over the next 6-12 months. I want to really understand those. And I'll just add one thing on the treasury companies. I do think they're the most overhyped, but I think they're also in a way the most underhyped if you can find the right instruments and the right companies to back.
Yeah, I'm guardedly optimistic about the intersection of AI and crypto. I've spent a lot of time looking into it, and I still can't quite grok like the real use cases that make a lot of sense to me. But it does seem like a lot of smart people and a lot of smart money is going into that category. And generally, when that happens, I think something useful comes out of the spaces. So I want to spend more time just wrapping my head around what is possible there and meeting teams that are doing something interesting in that category.
I will add. So I need to think. What I was trying to learn as a personally and not as a fund, because I'm a big skeptic on the treasury company, and I try to be more optimistic and think how these things work. So I'm trying to learn more and more. And potentially there was one idea in one of those panels before, I think like 3 hours ago, that someone said, learn about the treasury, put everything into ChatGPT, and then you may know when everything will crash, how to show the market. So maybe there's a trade idea there.
Perfect. So Adam, Ashkat, Andy, and David, thank you very much.
Thank
and
you.
you're now invited to the bar. Thank you.